In this video, we are going to talk about the world's greatest investors. So before starting this video, please like this video, and subscribe to our channel for the future updates. Here's the list of the world's greatest investors, so let's start. Number 8. Benjamin Graham. Both as an investment manager and a financial instructor, Ben Graham was quite successful. He is the author of a number of writings, including 2 investing books that are considered to be among the most important ever written. In addition to this, he is generally acknowledged as the founder of 2 essential investment disciplines, namely value investing and security analysis. Graham's theory on value investing holds that a given investment should be worth a significant amount more to an investor in the long run than the amount of money that was spent to acquire it. Because he adhered to the basic analysis school of thought, he looked for businesses that had solid balance sheets, such as those with low levels of debt, above average profit margins, and enough cash flow. Number 7. John Templeton. It is stated that John Templeton was one of the most successful contrarians of the 20th century. It is also said about John Templeton that he made more than a few excellent calls in between buying cheap during the Depression and selling high during the Internet boom. Templeton is responsible for establishing some of the biggest and most profitable foreign investment funds in the world. In 1992, he parted ways with his Templeton funds and went into business with the Franklin Group. Money magazine referred to him as probably the best worldwide stock picker of the century in their issue from 1999. Templeton, who was born in the Bahamas but later became a naturalized British citizen, was made a knight by Queen Elizabeth II in recognition of his numerous achievements. Number 6. Thomas Rowe Price Jr. It is often acknowledged that Thomas Rowe Price Jr. is the father of growth investing. He endured the hardships of the Great Depression during his formative years, and the lesson he took away from it was that he should invest in equities rather than avoiding them. Price had a cyclical outlook on the financial markets. In order to differentiate himself from the herd, he started doing something that was almost unheard of at the time. He started investing in reputable businesses with the intention of holding on to them for a long period. His investing theory centered on the idea that investors should place a greater emphasis, for the long term, on selecting individual stocks. Number 5. John Neff. In 1964, Neff became an employee of Wellington Management Company, where he remained for more than 30 years and was responsible for managing 3 of the company's funds. He was known as a value investor because he concentrated his attention on businesses that had low price-to-earnings ratios and high dividend yields. His favorite strategy for making investments entailed investing in well-known sectors by way of circuitous routes. He managed the Windsor Fund for 31 years, from 1975 until 1995, during which time it had a return of 13.7%, which was much higher than the S&P 500's return of 10.6% over the same period. This is a gain that is more than 53 times the value of the original investment that was made in 1964. Number 4. Jesse Livermore. Jesse Livermore has neither a formal degree nor prior expertise in the stock trading industry. He was a self-made guy who gained wisdom not just from his successes but also from his failures. Both of these outcomes contributed to the formation of trading notions that are still prevalent across the market to this day. Livermore started trading for himself while he was still in his early teens, and it is said that by the time he was 16, he had made earnings of over $1,000, which was a significant amount of money back then. Over the course of the subsequent several years, he was successful in betting against the so-called bucket shops, which were establishments that did not conduct genuine transactions and in which consumers gambled against the house on the fluctuations of stock prices. Number 3. Peter Lynch. Between the years 1977 and 1990, Peter Lynch was the manager of the Fidelity Magellan Fund, during which time the fund's assets increased from $18 million to $14 billion. More crucially, Lynch allegedly achieved a yearly average return of 29% throughout those 13 years, which was higher than the benchmark provided by the S&P 500 index in 11 of those 13 years. Peter Lynch, who was sometimes referred to as a chameleon, altered his investing strategy to whatever was successful at the moment. When it came time to choose individual equities, however, Peter Lynch adhered to what he was familiar with and/or could readily comprehend. Number 2. George Soros. George Soros excelled at turning macroeconomic trends into high-stakes bond and currency bets. In the financial markets, Soros was known for his short-term speculative plays. In 1973, George Soros established Soros Fund Management, the forerunner of the now famous Quantum Fund, a hedge fund. He apparently oversaw this aggressive and profitable hedge fund for over 2 decades, piling up yearly returns of over 30% and, on 2 instances, recording annual returns of over 100%. Number 1. Warren Buffett. Warren Buffett, sometimes known as the Oracle of Omaha, is widely regarded as one of the most successful investors in the annals of financial history. In accordance with the guidelines provided by Benjamin Graham, he has accumulated a wealth worth multiple billions of dollars, the majority of which was obtained via the purchase of stocks and businesses through Berkshire Hathaway. Those who put $10,000 into Berkshire Hathaway in 1965 are now sitting on more than $165 million today thanks to their investment. Buffett's strategy for investing, which emphasizes discipline, patience, and value, has handily beaten the market average for many years running. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.